Ladies and gentlemen, welcome to Wealth Dom. With me, your host Norbert BM, bringing you a weekly stock market report and the changes that we did to our portfolio with what we bought, what we sold, and why we did it. After the report, we're going to also do a risk assessment for the market, so definitely stay tuned till the end. So let's jump right straight into it with the S&P 500. Last week being up 1.35%, we saw a pretty big breakout in the market. We're still lurking in this bullish trend, as you can see in the diagram, but we're all also in a negative divergence, meaning that the RSI, the relative straight trend index, is kind of running out of gas here. So we saw the breakouts to the new highs, signaling a bullish trend, and the MACD buy signal was also re-triggered. We were last week in a MACD sell signal, but then due to the events from Tuesday and Friday, the MACD buy signal was triggered, and the RSI is still under the 70 range, signaling that the market is currently not overbought, and we do expect a small pullback to the market, but only in the realm of minor 3 to 5%. Also, we will treat small pullbacks like this as buying opportunity, looking forward to add even more to our portfolio. Talking about the portfolio, let's also jump straight right into it with our portfolio being up 1.13% over the last week. We are also yielding a combined dividend yield of 3.01%. We got dividends from TSMC, a $0.62 per share. Our current free cash is at only 6.33% of the portfolio, yielding a 3.5% interest on the free cash. But as I said, we do look to reallocate that cash again, maximally down to 5% of the portfolio as a free cash. We also did a dollar cost average into the S&P 500 ETF, distributed that is. And now let's jump straight into what we bought. First thing, on the 7th of October, we bought Pepsi. This was before the earnings even, when we saw that Pepsi was pretty much oversold, then breaking out from its oversold, trying to change the MACD back to a buy signal, increasing Pepsi to a 1.25% of our portfolio. I do want to mention here that after the earnings report, Pepsi did go higher and we did reduce the position. This is why we were actually at over 2% of the portfolio, but we're currently at 1.25 because we reduced that position. Same report, we took that opportunity and made some money from it. Next up, we bought Altria Group. We bought some cigarettes. Now, they're a real big company dealing also in vapes. We opened a new position in Altria, ticker symbol MO, obviously betting on that large dividend yield of over 8% from Altria. They're also pretty much overbought and they could trigger a MACD buy signal. So we do expect that Altria will increase its value in the upcoming weeks and months, actually, till we're planning to hold this at least till January, if nothing happens, or February. The Altria Group is still due to report earnings, so we are looking forward to it. Next up, we bought Merck & Company. In the pharmaceutical industry, we opened up a really small position of 1.83% in Merck & Company. The fact that it's pretty much oversold, so this is just a technical buy, as were all other buys, and we saw here that Merck & Company is trying to trigger a buy signal. It was pretty overbought, and we are currently in a positive position. Next up, we bought Procter & Gamble. Again, Procter & Gamble, a excellent company, one of those value companies, especially if you're expecting turbulent events in the market. Of course, we saw the technicals being pretty good for Procter & Gamble, and we opened a new position of 1.74% in our portfolio. Procter & Gamble is supposed to release earnings soon and also have this ex-dividend date. Next up, we did a trade in AMD, Advanced Micro Devices. Advanced Micro Devices had a really big pullback due to a bad report on some chips. There's where they had a roughly 5% pullback. We took advantage of that pullback, evaluating that is not that big of a deal. So we opened a position in micro devices and then we also closed it after taking some profits. We expected Micro Devices, if they have another pullback, we are going to add back to that stock definitely, but we currently are looking for Nvidia to have a bit of pullback. Just thinking that Nvidia is the better one of those two companies. Let's talk about one of the biggest growing company, that is Progressive. Now, Progressive Corporation is a insurance corporation. They are having an earnings call in, I believe, on Tuesday, the next week. The Progressive Corporation does have a very small dividend yield of 0.60% currently. They also had a much larger one. Now, with the P of 21.54, they are right there at the sweet spot of the complete S&P. We're expecting them to trigger a MACD buy signal, meaning that the stock will be pushed even further. With currently the 56 RSI, we do expect a over 70, maybe even 80 RSI, and then maybe we're going to consider taking profits. Although this is one of those stocks I would like to hold for a long time. Next up, let's talk about the positions that we added to. First things first, we added to Toyota Motor Company. So it is one of those companies that they do have an upper edge in the hybrid, meaning gasoline and electrical cars. They are one of the best producers of hybrid cars, and we do see a really big pullback in complete electrical cars in the demand, that is. With the European Union also increasing tariffs on cars from China, we think that Toyota has the upper hand here and may produce pretty good results, although I must confess we are pretty negative in our position. With the dividend yield of 2.49% currently and the EE ratio of 7.06, which is just amazing for the industry, but still it could represent that they're having problems, although I think that they are in 1 or 2 years going to have a really big breakthrough. As you can see in the diagram, Toyota is currently throttling through its difficulties, having a really big pullback from the $2,060 price to a $174 price, which is just terrible for Toyota. They basically went nowhere in one entire year. Also on the moving average, they are almost touching the 50-day moving average, which hopefully will pull everything or push everything back to figure that 100-day moving average and then the 200-day moving average, surpassing them, meaning that they will be then in the bullish run. Next up, we also added to Microsoft, a pinch of a position, but that we then closed our Microsoft position, expecting, as you can see, that triggered a sell signal. And until that signal does not return to a buy signal, we are going to keep away from Microsoft for now. Microsoft is a great company, one of the biggest companies in the S&P 500, also in all ETFs. So each time somebody adds to an ETF, they're actually adding to Microsoft and also Apple and also Nvidia. So we do expect Microsoft to have a really good year, but right now we're expecting a better opportunity. Remember, the most important thing is price. They are expected to release earnings soon, I believe in 2 weeks. No, that's not next week, but the week after that. If Microsoft continues to move down, triggering a under 30 RSI, then we will definitely add to that position. Basically, only on the technical levels, Microsoft is then due to a really big jump in its price. Next, we added to Boeing, or our favorite company as well. It's not, but Boeing is so beaten down that we increased our position to 2.22%. Also, they announced a huge layoff. They are, you can see in our RSI, they're not going anywhere. They are underneath even the 50-day moving average. So the 50 is underneath the 100 and underneath the 200. So they are in a selling bullish position. But we do expect in 1 or 2 years Boeing to double or triple their price. Remember, it's one of the biggest, if not the biggest, producing companies. So if Boeing fails, it's up there. It cannot fail. They also announced a 10% workforce reduction, which then pushed the price a bit up again once more. We are going to talk now of our closing positions. We already talked about what we reduced with Microsoft closing up, then Toyota, well, no, we added to Toyota, but we reduced in Pepsi, and that's basically the only thing that we reduced. So let's talk about Taiwan Semiconductor and Manufacturing Company, TSMC, or the ticker symbol TSM. Completely sold out of TSM due to the fact that we are much more bullish on ASML than on TSMC. If we risk adjust these two companies, well, ASML is in a much better position than TSMC. We are trying to focus our financials more in the direction of the winners. Also, with the constant threat from China, we do not see TSMC having that good of a year. Next up, we sadly closed PepsiCo Corporation. If you watched the videos from the last week, you know that we sold and sold from PepsiCo. They are basically so much overbought right now. They pulled back a bit, then they had another breakout. If PepsiCo will have a much larger pullback that we are going to add back to that position or reopen the position momentarily, we close our position having gained and realized really good gains from that position. Remember, PepsiCo is one of the biggest uranium producers from Canada, and we do expect from them to have a massive decade if everything goes as planned. We already talked about the fact that we closed Microsoft, so now let's move on to risk assessment. Let's talk a bit about the S&P. Although the S&P was in a MACD sell signal last week, then it flipped on itself, triggering a MACD buy signal after a couple of good economic results. Although they are contradictory because we do not see the Federal Reserve cutting interest rates in November, 25 basis points, and due to that, we only see a 75 basis points for this year as a cut, unless something bad happens. The market is currently in a bullish run. So let's do a bit of risk assessment. The RSI is currently in a 64, underneath of 70, so nothing is overbought. The MACD is now in a buy signal again after a sell signal. If this is also confirmed on Friday, so just think about it. When the market closes on Friday on a positive note, it's very rarely, excepting something bad happens over the weekend, it's very rarely that they open up the next week with a negative tone. So we do see high risk from the RSI because it is in a 64, but we do see low risk due to the MACD buy signal. Now the S&P is in a new all-time high, and all-time highs do push to new all-time highs, but we also see this as a very high risk that is already in an all-time high. You know, if something is perfect, where can it go? It can either maintain perfect conditions or it could reduce perfect conditions. There's nothing in the upside. You cannot be more than perfect. Now, the presidential elections are due in a couple of weeks. So this is high risk, and it's not very high. When we're near that presidential election, then we know that we are in high risk, and maybe there is where the market will pull back just a tinge. It's not going to crash, just going to pull back a bit, maybe. But with this Friday, already triggered our earnings season, opening it up with the big banks, and we're going to continue in the big banks in the upcoming week. So the risk is low there for a big pullback in the market. Also, buybacks will start in approximately 2 weeks, and there is a medium risk for the markets when the buybacks will start, and it's going to go down to low risk. And this will leave us with a 58.33% risk in the market. We are considering now a pullback as a buying opportunity and not as a risk reduction opportunity. So stay safe out there. Let me hear your opinion on the risk of the markets. What did you buy and sell? Leave it in the comment section below. With this being said, I'm Norbert BM. Please hit the like button of the video if I brought you any kind of value. Also consider subscribing to the channel. We post from Mondays to Fridays, and on weekends we post our portfolio review and our market review. Being said, I'm Norbert BM. Have a lovely day. Catch you next time. Bye-bye.